So what's in style? We have to listen. Let's be stock whisperers here. Let's see what the market is whispering to us. First, the most down and out retailers, the ones that need a boom to thrive. They did well today. I saw Macy's step by step, inch by inch moving up. Kohl's joined it. Kohl's! There are signs of an accelerating economy, no doubt, as they need a recharged consumer who's willing to go out and shop, or they can't make the numbers. Same with Nike's poor cousin Under Armour, with a stock that looks ready to break out. And Gap Stores, which seems like it's trying to mount the kind of recovery that we got from L Brands. Of course, some of the strength in retail could be the pin action from the amazing performance that we saw in Bed Bath & Beyond. But I think that's a mistake to extrapolate that. It doesn't really work like that. You see, Bed Bath & Beyond is now managed by a magician. It's followed by the name of Mark Tritton, late of Target. He's pulled a rabbit out of a hat here, much to the chagrin of a multitude of short sellers whom I got to tell you had a real bad day. They could have a Modelo on me. Bar's closed. Thanks for nothing. Anyway, Bed Bath sells housewares, which are doing a lot better than apparel. We're going to hear from Mark later on about this amazing turn in BBBY, which is not done, by the way. Let the short sellers try to knock it down and then bring it in. That's what we used to do on the trade desk. Bring it in. The mall-based Foot Locker is finally showing some life after spectacular numbers from Nike, although a lot of the strength of Nike comes from cutting out the middleman, which happens to be Foot Locker. Even the pathetic stock Nordstrom was up today. Could there really be a return to the mall? If so, people are richer and less fearful than it seems. They're definitely bored. Second, you'd think that the consumer-dependent tech stocks would be hostage to the stimulus talks, but they're roaring. So are the stay-at-home stocks that are technology-oriented. Remember, there are two prongs to the stay-at-home thesis. There's the lockdown component and the remote work component. At least for the moment, the lockdown trades aren't really working. America has reopened. People are going out again. I think that holds true unless we get another major spike in COVID, even if we do. But just because we're going out again does not mean we're taking unnecessary risks. Remote work is still the order of the day, and e-commerce is on fire, hence the surge in Amazon and FedEx, United Parcel. Hey, by the way, Doc, you saw me had them on the other day. Remember, they were kind of talking about how they do a deal with Zoom? Man, I'm glad I put that one up there because that's exactly what they do. Both stocks. Third, there are other signs of life that are truly positive. Look at the endless rallies in Penn National and DraftKings, the former casino company that bought a big piece of Barstool. The latter, an amazingly hot fantasy sport and gambling website. Full disclosure, they sponsor my bull market fantasy internet program. A lot of synergies. These moves show that yet younger consumers still have plenty of disposable income to wager on sports and, of course, on options and on SPACs. The demand for SPACs, thanks for mentioning them, many of which are good, continues to pace. I try to cover them all, but many of them are either hard to keep track of or hard to understand because sometimes they're just big piles of money where you have to hope management will make a good investment. You see, the success of these SPAC deals tells you there's a huge appetite for risk, both among institutional investors and home gamers, particularly those new to the market. As a matter of fact, I wrote a blank check to my painter today. And, I was getting nervous about the blank check until my buddy Haley showed me. There it is. I mean, I want to write a blank check. I'm afraid to write it for a painter. Some people, they're writing $400 million blank checks. What the heck? Put it all together. And I can understand why so many Republican senators are reluctant to spend a fortune on another huge stimulus package. The average suggests the economy is moving in the right direction. When Johnson & Johnson's down $2, but Darden, the owner of Olive Garden, is up $4, Skyworks, which makes the guts of high-end cell phones, up $6.50, and small business empowers Etsy and Twilio are screaming higher, ladder up almost 40 points on a pre-announcement of a better-than-expected quarter. It's clear the market is not worried about a slowdown.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.